Mistakes first-time home investors make. Let's talk about it right now. Hi everyone, this is Reneta Osobase, your Austin relocation expert. Venturing into the world of real estate investing can be very exciting and very intimidating. I know as a real estate investor, you're probably eager to get started, but it's essential to be aware of all of the potential pitfalls that lie ahead. In this video, we are going to discuss the worst mistakes first-time real estate investors make and how you can avoid them to ensure a successful and profitable investment journey. So let's dive in. Number one, lack of research. It is so important that you make your research before you start investing in real estate. What do I mean by that? Not doing your research can lead to purchasing properties that don't align with your real estate investment goals. That means that you can purchase properties that don't have really good returns. You have to research property tax rates. You have to research the neighborhood appreciation rate year over year. You have to research the job market, etc. I always run rental comps for all of my investor clients so they know how much this particular property is going to rent for and also how long properties stay on the market in that particular neighborhood. It's very important that you purchase a property in a neighborhood where properties stay on the market for less than 30 days. Number two, underestimating costs. Another common mistake a lot of first-time real estate investors make is underestimating costs that are associated with real estate. They are failing to account for expenses such as maintenance, property taxes, insurance, that can absolutely erode your profits. You always have to have some money put aside for unexpected repairs, unexpected expenses, increasing property taxes, especially here in Texas, and insurance. Number three, inadequate financing. Many first-time investors don't secure the necessary financing for their investment properties. This can lead to cash flow problems. It can also make it very difficult to cover expenses and ultimately can result in financial distress. Interest rates right now are pretty high, so please make sure that the rent you're getting from that property is going to cover the mortgage. Also, a lot of first-time investors don't know that interest rates for investment properties are about 1% higher than if you're buying the property as a primary residence. The next mistake a lot of real estate investors make is purchasing properties without inspection. I cannot stress enough how important it is to do an inspection on the property and how important it is to have a good inspector. Skipping on inspection can cost you a lot of money in the future, and also not having a good inspector can rob you of your peace of mind and can cost you a lot of money in the long run. So please make sure you do an inspection and make sure you have a good inspector. The next mistake a lot of investors make is skipping on due diligence. Not performing your due diligence before making a purchase can lead to investing in properties with legal issues, liens, problematic tenants. This can result in costly legal battles, lost rent, and a damaged reputation as a landlord. Screening tenants is very important. That's why I always recommend you use a real estate agent. It's crucial because they will run a background check, a rental history check, criminal credit history, so you will know that the applicant is well qualified. Another mistake is overlooking the importance of location. We know, everybody knows location. It is very important in determining the success of your investment property. Ignoring location can result in purchasing a property in a declining neighborhood, which can lead to and it can negatively impact the property's value and rental income. Also, if you're purchasing a property for an Airbnb, for example, you have to make sure that the HOA allows short-term rentals. So make sure you review the rules and regulations of that HOA and also the occupancy rates. Another mistake is not accounting for property management. Property management is not for everybody, especially if you're an out-of-state investor. Management fees here in Texas are 7 to 8% of the monthly rent. So please make sure you can afford it, because this will be it will impact your profits, and good management companies are very important to the bottom line. Another mistake is failing to diversify your investments. Please don't put all of your eggs in one basket. That can be a very risky strategy. Focusing solely on one type of property or one location can expose you to significant losses if the market takes a downturn. For example, don't buy in just one area, or just condos, or only single family homes. Make sure that you purchase in different areas of town, you purchase different types of properties. So how to avoid these mistakes? Educate yourself. It is very, very important. Before jumping into real estate investing, take the time to learn about the real estate investment world. Go to different seminars, read books, talk to real estate investors, talk to realtors. It is very, very important. Please do not make decisions and don't spend your life savings without doing your research. The second one is develop a solid investment plan. Create a detailed investment plan that outlines your goals, your strategies, and also your timelines. This can help you stay focused and make informed decisions. Consult with professionals. Don't hesitate to seek professional advice when needed. Real estate agents, attorneys, title companies, financial advisors. Please talk to as many people as you can, because they're going to provide very valuable insight and they can help you navigate the complexities of the real estate investment world. The next one is be patient. Real estate investing is not a get-rich-quick scheme. So please take the time and do research. Investing takes effort and patience, so it doesn't happen overnight. Avoid making hasty decisions and give yourself and your investments the time to grow and generate returns. So let's talk about some frequently asked questions. Question number 1. What should I consider when choosing a property for investment? That is a very good question. You have to consider factors such as location, property type, potential rental income, and appreciation potential, and also your investment goals when evaluating properties. Question number 2. How can I determine if a property is a good investment? Good question. Conduct thorough research. I know I have said this a couple of times, but you have to analyze comparable properties in the area, how long it takes for those to get rented, calculate potential returns on investment to determine if a property is a good investment. Question number 3. What are some ways to finance my real estate investment? Great question. There are so many different ways. Don't think that conventional financing is the only way. You can do traditional mortgages, you can do private loans, you can do hard money, home equity loans, real estate crowdfunding, and even seller financing. Next question. How can I mitigate risks in real estate investing? Of course, real estate investing is risky, so please diversify your investments, conduct thorough due diligence, and also maintain adequate cash reserves to cover unexpected repairs and expenses. Next question. What is the role of a property manager? Great question. A property manager is essential, especially if you're out of state. They're responsible for the day-to-day operations of a rental property, including tenant screenings, rent collection, maintenance, and addressing tenant concerns. Property management fees, as I said, here in Texas, range between 7 to 8% of the monthly rent. So here you have it. biggest mistakes first-time real estate investors make. If you have any questions about the Austin real estate market, or if you're thinking of investing here in the Austin area, please don't hesitate to reach out. I would love to help. I'll see you on the next one.